My name is Jung Seh. I'm one of the financial advisors here at Bogart Wealth. I welcome you to today's webinar on Social Security. Today, we are going to be covering a number of different topics. But before we get started, if you're not familiar with Bogart Wealth, I just wanted to give you a little bit of background. Our mission is to provide financial peace of mind. We currently manage $2.7 billion assets under management, and we have a little bit over 1,300 client households. We are a registered investment advisory firm, meaning that we are registered with the Security Exchange Commission, the SEC, and we have a fiduciary responsibility to always act in your best interest. So as a registered investment advisor, we are independent, meaning that the only way that we make money is through the professional management of your money. We don't sell annuities. We don't sell insurance. So we don't get commission. We don't sell any other products. And that is truly how we continue to act as a fiduciary and always act in your best interest. We do use Charles Schwab as your institutional custodian. They are a huge institution, and that is a way to safeguard your investments. As a registered investment advisor, we work with complex portfolios and address wider needs that require a highly customized level of investment experience. So really what that means is we have a number of different professionals here that are subject matter experts in a array of different areas. And we provide you with holistic and comprehensive planning so we can help you to and through retirement. Transparency is very important to us. So as a fee-based only wealth management firm, there are no trading commission incentives. Okay, so let's keep going. Just to give you some visuals on who are behind the scenes at Bogart Wealth. This is our executive leadership team. Of course, we have James Bogart, our CEO, and we have Jeff Berman, who is the president, Michelle Dubé, chief operating officer, Alex Spencer, who is our chief investment officer, and Suzanne Kellogg, who is our chief compliance officer. We also have talented advisory team here, as well as a in-house portfolio management team. Alex Spencer is the chief investment officer who leads a amazing team that really is the brains behind our portfolios here. We have a client service team, just an amazing financial planning team, and a number of different professionals here who also make Bogart Wealth work behind the scenes. So we are located in McLean, Virginia. That is where our headquarters is located. And we also have offices in Houston, Texas, and Woodlands, Texas. We have a number of different webinars, as well as podcasts and other resources. You can find these on our website. Some of the other webinars that we provided are listed here listed here in front of you. And so if you ever want to go back to this one that I'm presenting today or want to listen to any of the other ones, you are welcome to watch those on our website. Okay, so let's get started. Today we are talking about Social Security. So we're going to go into what is Social Security, how do I become eligible, what are the benefits, how to apply, when should I start collecting Social Security benefits, and a controversial topic right now, will Social Security be there for me? Some other tips, and questions and answers. You can contact your financial advisor if you are a client. If not, you are welcome to contact us through our number or our website. Okay, so what is Social Security? As of 2025, about 73 million people are receiving Social Security benefits. So how it really works is the people that are currently working are the ones that are funding the Social Security benefit recipients today. And those different types of benefits include retirement income, disability income, and income for survivors and dependents. And interesting fact, if you didn't know, people who are incarcerated cannot receive Social Security benefits. Okay. So who are not covered by Social Security? Railroad employees, they are eligible for Medicare, but they're not eligible for Social Security benefits. Some Americans that work abroad, student nurses and students working for college or college club, minor child under 18 who is employed by a parent in an unincorporated business, ministers, members of religious orders, and Christian Science practitioners if they claim an exemption, members of tribal councils. And this is fairly new, and I'm going to go into a little bit of this on the next slide. But state and local government employees can exclude some employees from Social Security coverage, but only if these employees are enrolled in a retirement plan that meets federal regulations requiring sufficiently generous benefits. So that was a change that was enacted earlier this year. On January 25th of this year, the Social Security Fairness Act was signed into law, which repealed the windfall elimination provision and the government pension offset. So these provisions reduced or eliminated Social Security benefits of individuals who received non-covered pension, meaning they worked in a job that didn't pay into Social Security. So this law now includes Social Security benefits for certain type of workers, including some teachers, firefighters, and police officers in many states, federal employees covered by the civil service retirement system, and people whose work had been covered by a Social Security system. So this is fairly new. Those who were subject to receiving an increase because they were a part of the WEP or the GPO, they were contacted by Social Security and got their increase in benefits. They will also be eligible now for spousal and survivor benefits. There are more information coming. So if you are subject to it, please contact us. Or the Social Security website is actually very, very informative. Much of the information that I'm providing you today is directly from Social Security. So if you are directly impacted, I would highly encourage you to contact Social Security Administration. Okay, so how do I become eligible? In 2025, you earn 1 credit for every $1,810 in earnings. So that is up to a maximum of 4 credits per year. And the amount of money needed to earn 1 credit usually goes up each year. So most people need 40 credits, and that's equates to about 10 years worth of work to be eligible for benefits. Social Security taxes you pay are based on your earnings up to a certain amount. And this also can increase. In 2025, the amount is $176,100. On Medicare taxes, however, you pay all your wages. So it doesn't matter how much you earn, you're always going to pay Medicare tax. Okay, and the table below shows how much you pay in Social Security tax, which is 6.2 and 1.45 for Medicare. If you are self-employed, then you will pay double that, the 12.4 or 1.9. And in addition, workers who earn $250,000 or more for married filing jointly, or $200,000 for single, do pay an additional 0.9% on Medicare tax on income that exceeds that threshold. Okay. So workers' benefits. How are the benefits calculated? The monthly benefits are based on a primary insurance amount that also stands for the TIAA. It is indexed for price inflation over time. And the benefits are adjusted with inflation each year according to the Consumer Price Index. For urban wage earners and clerical workers, this number is provided on the website, I believe around November of the year prior. So if you want to find out how much your Social Security benefits are going to increase for 2026, the number should be out by 2025, or you'll likely get a letter from Social Security as well. Okay, so full retirement benefits. You are eligible for full retirement benefits. It really depends on when you were born. And the FRA is when you are eligible to receive 100% of your private insurance amount. So if you were born between 1943 and 54, your full retirement age is 66. Anywhere between 55 and 59, it's gonna go, vary. It's gonna be 66 and some months. Anyone born after 1960 or later, your full retirement age is 67. Okay. So you can collect Social Security benefits prior to your full retirement age, which is the FRA, but you're going to be receiving a reduced amount. So here I'm using an example. If your full retirement benefits is $3,000 and that's at age 60 and you start collecting early, here below is a table of how much your benefits would be reduced by. So if you start collecting at age 62, you would be receiving 70% of that 3,000 benefit. So that would be 2,100 and so forth. Okay. You can also elect to start Social Security benefits after FRA. And if you do so, you can receive an 8% increase each year up to age 70. 70 is the latest you can start collecting Social Security benefits. So using the same example, if someone who has a FRA age is 67 and their benefits is 3,000, at 67, they receive 100% of that PIA. That would be $3,000. If they started at 68, that would be 108% of that $3,000. So that would be $3,240 and so forth. Okay. You can also continue to work while receiving Social Security benefits. However, there can be penalties. So your earnings in or after the month you reach FRA won't reduce your benefits. So if you are still working and you have reached your full retirement age, you are not subject to any penalties. However, if you do continue to work prior to your full retirement age, there is a limit to how much you can earn and still receive full Social Security benefits. So if you work but start receiving benefits before FRA, $1 in benefits will be deducted for every $2 in earnings you have above the annual limit. So in 2025, that is 23,400. So if you earn 23,400 or more, you will get $1 in benefits deducted for every $2 in earnings. In the year that you reach FRA, that's the year you reach FRA up to the right before your birth month, your $1 in benefits is reduced for every $3 you earn over a different annual amount. And for 2025, that is $62,160. Okay, so Social Security benefits pays disability benefits through two programs, the Social Security Disability Insurance, also known as SSDI, and the Supplemental Security Income. A worker is entitled to disability benefits if they are under 65 and has been disabled for 12 months and is expected to be disabled for at least 12 months, or has a disability which is expected to result in death and has completed a 5-month waiting period. The federal law has a very strict definition of disability. You'll get Medicare coverage automatically after you've received disability benefits for two years. Also, certain family members may be eligible for benefits based off your work. So if you are deemed disabled, your spouse may be able to receive benefits if they are 62 or older. Your spouse at any age, if they are caring for a child of yours who is younger than 16 or has a disability. Your unmarried child, including adopted child, or even some cases a stepchild or grandchild. The child must be younger than 18 or younger than 19 if they are in high school. Next, we have spousal benefits. The spouse or divorced spouse of a retirement beneficiary is eligible for Social Security benefits if the spouse or divorced spouse is 62 years or older. The amount is equal to a maximum of 50% of the retirement beneficiary's full retirement age. Primary workers must have filed for benefits. So that means that if you have a couple, and I'm just going to use John and Mary as an example, and John was the primary earner, then Mary wants to start collecting Social Security, spousal Social Security benefits. John must have already filed and collecting his benefits in order for Mary to collect spousal. And the maximum that Mary could receive is 50%. And that maximum amount must be collected at the full retirement age for both. Okay. Spouse must be at least 62 for reduced benefits or FRA for full benefits. So the maximum spousal retirement benefit is 50%, but if you can start collecting earlier, just be receiving a reduced amount. But again, the primary the primary worker must have already filed for benefits. If a worker is eligible for benefits based on their own record and spousal benefits, Social Security will pay a total amount approximately equal to the higher of two benefits. So going back to my case, Mary can start collecting off her benefits first and then switch over to the spousal, but the most that she will ever be able to get is the approximate amount that is equal to the higher of the two benefits. Spousal benefits are reduced if claimed before FRA, and there is no increase for starting spousal benefits after full retirement age. Okay. Same-sex couple benefits. Same-sex couples, marriages in all states are recognized for purposes of determining entitlement to Social Security benefits. Some non-marital relationships, such as civil unions and domestic partnerships, are recognized as well. U.S. also recognizes same-sex marriages and some non-marital legal relationships established in foreign jurisdictions. Applies to all Social Security programs, retirement, survivor, and disability. Divorce spousal benefits. It's same as spousal benefits if the marriage lasted 10 years or more. Person receiving divorce spouse benefits is currently unmarried. The ex-spouse is at least 62. If divorce was more than 2 years ago, ex-spouse does not need to have filed for benefits. Okay, and then now we're going to go into survivor benefits. Certain members of your family may qualify for benefits if you are insured worker. Your surviving spouse may qualify for reduced benefits as early as 60. May be able to get full benefits at FRA or as early as 50 if they have a disability. Your surviving spouse may be able to get benefits at any age if they take care of your child who is younger than age 16 or has a disability. Unmarried children younger than 18 or up to 19 if they're attending elementary or secondary school full-time may be eligible to get benefits. Your children can get benefits at any age if they have a disability before age 62. Your dependent parents may be able to get benefits if they are 62 or older. You must have provided at least half of their support. Taxation on Social Security benefits, and this amount can change as well. For married filing jointly, if you earn under $32,000, you are subject to 0% tax. If your income is $32,000, between $32,000 and $44,000, up to $50,000. Over 44, up to 85, and so forth. You'll see what the how the taxes change and the income limits depending on your filing status. And this is based on provisional income, which equals your adjusted gross income plus 1/2 of Social Security benefits and tax-exempt interest. Okay. So how do you apply? You can apply for Social Security benefits up to 4 months before you want your retirement benefits to start. Your Social Security benefits are paid in the month following the month they are due. So if they are due the month of December, you will receive your first check in January for December. Based on my experience working with a lot of clients over the years, the easiest way is to apply online. It is actually pretty straightforward. And again, Social Security, the website has a ton of very helpful information and resources. You can also apply for Social Security over the phone or at a local Social Security office. You can withdraw your application, but you only have up to 12 months to withdraw if you change your mind, and you will be required to repay any benefits you've already received. Okay, so when should you start Social Security? This is, of course, one of the most frequently asked questions when it comes to Social Security, and it depends on a different number of factors, which is why it's so important that you speak with your financial advisor or consult with one to see how to maximize your benefits and how it is incorporated into your overall comprehensive plan as you transition from the accumulation phase to distribution phase. the planning aspect really becomes that much more important. So some of the factors when it comes to discussing when it's best to collect Social Security are your income needs. So do you need the income? Are you still going to be working? Have you factored Social Security in with all of your other income sources? Examples are required minimum distributions, pensions, and investment incomes. And as you start or considering when to start those various income sources, you also should consider Medicare brackets. Your your health status. So, is there longevity in your family? If there is longevity in your family, it may be more efficient to start collecting at a later age. So you're collecting a higher amount and letting that inflate over time. And if how is your health? If you are relatively healthy, then and there is longevity in your family and you're healthy, then it may also make sense for you to start collecting the higher amount at a later age. However, I would say if it's the opposite situation, then it may be more efficient to start earlier. So if you do not have longevity in your family or your health is not well, then it may make more sense to start at an earlier age so that you can start collecting your benefits sooner. Marital status. So who was the higher earner? What was, looking at the different benefits amounts that you and your spouse will be collecting, and try to devise a plan on when it would make the most sense for one to collect versus the others. Generally, when we have a couple, then we look to see if it would be more efficient to maximize the amount of benefits if one were to delay to the latest age 70. That way, with survivor benefits, if one passes away, then the survivor spouse will automatically continue to receive the higher benefit amount. Employment status is another factor to consider. So there may be penalties working and collecting benefits prior to full retirement age. So that would definitely be something to consider if you are going to earn over those thresholds that I went over earlier. Okay, so here at Bogart Wealth, in addition to helping you with a comprehensive plan, we can also run a Social Security analysis that looks at your benefits and at what ages do we think that you can maximize the amount of benefits that you can collect over the you or and your spouse's expected lifetime. Okay, I'm going to put on my glasses for this one. So, will Social Security be there for me? This is a hot topic right now, and right now, based on the last report that Social Security Benefit Administration provided, you'll see up at the top the Social Security, and then underneath it you'll see the old age survivor insurance, OSAI, which is basically the retirement and survivor benefits, and then disability benefits. So as of the most recent report by Social Security, The full scheduled benefits are expected to be payable until 2033. And beyond that, the benefits it could be reduced by 21%. So you would be collecting 79% of your benefits. For disability benefits, it is expected to last until at least through 2098. And then for Medicare, hospital insurance, which is Medicare Part A, is scheduled to be payable until 2036. And then beyond that, it could be reduced by 11% down to 89. And then the Part B is there is no timeline where the benefits could be reduced. So I know there are a lot of concerns about whether or not Social Security could be there, or if your benefits could be reduced. But Social Security, we've actually gone through this before, and this was back in 1977 and 1983. Social Security was amended. So just like today, the Social Security Trust Fund was predicted to run out of money. The trust funds would have been exhausted in the early 1980s if legislation had not been enacted in 1977. So raising taxes and curtailing future benefit growth. In 1983, Congress passed additional major legislation. So they increased maximum earnings subject to Social Security tax from 100% of median wage income to 250% of median wage. They also introduced index cost of living adjustments, so your benefits being adjusted with inflation. And they increased payroll taxes from 6% to 7.65% on workers and employers. They also raised the full retirement age to, in that it was originally 65, but now it goes from 66 and some months for those who were born between 1943 and 1954. And if you're born after 1960, then it's 67. And they added a new workers to the system. Federal employees hired after 1983, all members of Congress, federal judges, etc., made Social Security benefits partially taxable. So some of the things that are some reforms that could be enacted or put into legislation to help curtail the current timeline of these Social Security benefits that are right now expected to be reduced in about 8 years or so. These are some of the possible reforms. So we could increase maximum earnings subject to Social Security tax. So 2025, that was at $176,000. So that could be increased, or just like Medicare, we can just remove the cap on it. So no matter how much you earn, you will be taxed on Social Security as well. We could increase the full retirement age from 67 to anything beyond that. It could increase the early eligibility age not set at 62. And we could reduce the inflation adjustment, could change the benefit formula, increase benefits taxation, increase the tax base. So yes, just like in the 70s and 80s, we are kind of in a similar situation. And I do think that there is in my opinion, a very good likelihood that one or some of these will be enacted, and the benefits most likely will not be reduced. Baby boomers are the biggest voting population in America, and this is just another personal opinion of mine. I don't think that either party would risk hurting Social Security benefits that are being paid out to the biggest voting population. So I think this is a very interesting topic, and it's something that I follow personally. So if you have any questions, always feel free to check out the Social Security Administration website. They put out an annual report on the Social Security Trust Fund. Some other tips. Social Security can estimate individual benefits and tell you the amount you are entitled to now. So if you need concrete numbers, you call Social Security and they will be able to give you your benefit amounts. They cannot project future benefits through scenario planning, and they can't help with innovative strategies designed to maximize benefits, and that's where we come in. And just a little bit of background history for some of you that were born prior to 1954. There were some strategies before called file and suspend and deem filing. Those are no longer available. If you start Medicare Part B, and start Social Security after 65, the benefits will all be automatically deducted from the Medicare Part B premiums will be deducted from your Social Security benefits on a monthly basis. If you start Medicare Part B but do not start Social Security, you will have to pay your Part B premiums on a quarterly basis. This is another tip. If for some reason your income increases for an unusual once in a lifetime event, there is a form called SSA Form 44. If that income caused you to go over the Medicare bracket threshold and increase your Medicare B premiums, you can appeal that. Okay, so that brings us to the end of the Social Security presentation. I hope you find it helpful. And we have a number of other very helpful and informative webinars on the website as well. So I highly encourage you to check those out. And then tune in for our future webinars. We do provide one-on-one financial strategy sessions. Consultations are always complimentary. You can contact us through our phone number, our website, or if you do have a financial advisor here, you may contact them directly. So we encourage you to stay in touch with us, and these webinars are for you. And so if you have any feedbacks on what you liked, what we thought we could do better, any subjects that you would like to hear, we highly welcome your feedback. So thank you so much for joining today, and hope you have a great rest of your day.